Thank you, Mr. Mehta, for joining us. Welcome, Mr. Bhavik. We are talking today about the performance of the Dubai and Abu Dhabi markets during the first half of the year. Before going into these details, I know that you are following it closely in the emerging markets. What was the performance during the first half, and how can the Dubai and Abu Dhabi markets can be compared with what we have witnessed when it comes to the MSCI?
Right. First of all, thank you for having me on the show. Overall, we have seen that the liquidity conditions have been very good as far as the Dubai and the Abu Dhabi markets are concerned. So the solid boom in the last 2 years IPO activity that has actually translated to a good secondary market trading. So if you look at the overall trading volumes and the amount of new account openings in the DFM and the ADX index, those are really supporting the overall market activity. Recently, we saw a correction in both the indices till the May month, but both the indexes have bounced back strongly from those support levels, aided by the big demand that we are seeing in the markets. And as far as the MSCI index inclusion is concerned, we see a lot of traction that is going to happen probably with the bond and the sukuk market. That's really going to lead the overall financial markets in this part.
We have started the year with some geopolitical tension in the Middle East that have increased over the first couple of months, and which have as well affected the foreign investments for the Dubai and Abu Dhabi markets. To what extent do you believe that this impact has materialized when it comes to foreign liquidity, if comparing with the liquidity of the first half and compared with last year's liquidity?
Well, let me bring to notice one important statistic. So, as you've rightly mentioned, because of the geopolitical stress and also the oil prices that fell during the April and May month, around 7 to 8%, the FIs were net sellers during this particular period. But in a surprising turn of events, what has happened is the domestic buyers, that is, I'm talking about the GCC investors as well as the local expat population, they have turned into the net buyers over the last 2 to 3 month period. So we are well past that scenario where the FIs could completely dominate this particular part of equity trading. There seems to be solid retail activity that is supporting at this point of time.
The results, the business results that are being announced when it comes to the main sectors, whether we're talking about the real estate or the banking sectors, to what extent do you believe that this will be supportive for an increase in the foreign investments and for the local investments in the market, whether we're talking about the Dubai or Abu Dhabi markets, and on what do they rely on, the real estate or on the banking sectors when it comes to attracting more liquidity?
Recently, we saw earnings from Emirates NBD, and I believe ADCB was out with the earnings. The earnings have actually proved the market estimations wrong. So before the start of the year, all the analysts and economists were worried that the impact of the corporate tax is going to be very huge on the banks. Now, what we are seeing is banks are somehow able to maintain their cost of risk. The liquidity, the lending activity remains very strong, and banking sector as such looks to be remain very buoyant and very, I would say, stellar with regards to the ongoing taxes and changes that are happening. Real estate, again, stocks, MR group stocks and Alda properties, those continue to support the index in a big way. So it's ultimately real estate and banking that are holding and are likely to hold the index for the rest of the year.
What do you believe to be the impact when it comes to the IPOs, when it comes to the second half of the year?
Right. So, to the best of my knowledge, majority of the IPO names have already been out. They have already applied for listing, or in the process, or have already got listed, started trading. Now we have, I think, two big names like Lulu that is going to come out with the IPO. So we do not see a major chunk of the market activity happening in the primary IPO market. The good thing for Dubai and Abu Dhabi is the majority of the state-owned enterprises, they have already been listed. These are the companies that that have solid cash flows and the dividend yield aspect. So that has brought back a big enthusiasm for the market. As far as the private player listing is concerned, one of the major activities that we're looking at is the Lulu IPO. That's going to have the market's attraction.
To what extent do you believe that the investor today needs the IPOs to actually be involved in the new sectors? During the past couple of months, we have seen that we have the utilities or the education being involved, such as, for example, Alif for education, Alif للتعليم. To what extent do you believe that the Emirati markets need this diversity away from the sectors that were actually traditional over the year?
Again, a very good question, because the stock that you've mentioned of Aleph Education. So what happened initially during last 2 years was investors were getting crazy, to subscribe to the IPO, get good listing day gains. But Aleph Education, as soon as it got listed, I think had a fall of 15 to 20% on the main trading day itself. So what we are seeing is, apart from a big cash flow utility sector that has been supported by government, investors really don't know what the value of that particular stock is the case as that happened with Aleph Education IPO. So even in case of Lulu, we feel that if the valuation numbers are not right, the markets might want to not jump onto the first day of trading, maybe wait for some amount of correction in the stock, and then go back to the secondary market for buying that particular stock.
Thank you very much,
Thank you.
Mr. Bhavik Mehta, for joining us. It was a pleasure having you.
Thank you.